You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the Option Block.
All right, everybody. Welcome back to the Option Block, a little program we like to do around here a couple of times a week, every Monday, every Thursday, 3 p.m. Central, 4 p.m. Eastern. For your listening pleasure, if you are able to do so, I'd love to have you join us live. The easiest way to do that, of course, via Mixlr, Mixlr. You can just follow. If you grab that link once, so we put out all the time via social media, everything else, you can use it every time because it's the same page, same link every time. You can always also follow us via the Mixlr platform. You can get it in every device, pretty much everything you possibly could use, and it'll notify you the second we are going live, so you guys can tune in and not miss a second of the live version, the raw version, as we call it, how the sausage is made. And, of course, for all of you out there who like to tune in after the fact on your own schedule, we love you guys, too. You can get it usually on Tuesday morning and Friday morning for all of your listening pleasure. And, of course, my name is Mark Longo from theoptionsinsider.com, as well as, of course, the ever-expanding network. In addition to the live, you can always find the on-demand, a bunch of places, including theoptionsinsider.com. While you're there, maybe click on an article, a headline, some breaking news on the options market, whatever it is that may float your collective boats out there from an options perspective. We probably got it for you. And, of course, you can always find us in all your favorite stores, iTunes, TuneIn, Stitcher. A lot more coming up on Google Play. They had some weirdness with what they want for cover art. We're getting all that sorted out, so more of the shows are available on Google Play. If for some reason you're a Google Play user and the show you like wasn't there, check again. It probably is now. And, of course, you can bypass all of that stuff altogether. Just grab our mobile app, available for iOS, Android, and the beloved Fire OS. And no matter how you get our stuff, A, we welcome you. B, we want to hear from you. So send us your questions, your comments, your insights, your bon mots, your pearl of wisdom for us as well as for your fellow Options Insider listeners. And joining me on the old program today, it's a bit of a mystery who we got. It's a grab back on the old all-star panel today. We cast the net. Let's see what we caught. Let's start out. I think we got someone beaming in from the great state / principality / duchy / hamlet known as St. Charles, Illinois, where we are joined by none other than Uncle Mike Tussaw himself. Uncle Mike, welcome back to the Option Block program, sir, and happy Thursday to you.
Always happy to be here from the great Duchy Hamlet. I get to be a duchy today. That's exciting now that Andrew's not here.
You've been upgraded, sir, so pleasure as always. On the old program. And of course,
absolutely,
as you mentioned, the Rock Lobster, I think he's having some internet issues out there in the great state / principality of Maine. So we'll see if we can get him on in a little bit. But meanwhile, it's time for us to keep on rolling with the program right on into the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is indeed the portion of the program where we break down what caught our eye in today's market activity. We are, of course, recording and streaming this live on Thursday, August 4th, for all of you playing along with the old home game. And another relatively quiet day on the old street, all things considered from a broad market perspective. Not a lot really lighting up the old tape today. S&P closing, we're effectively unched on the day, fractionally up on the day. NASDAQ fractionally up as well, and the Dow off fractionally, a couple of handles, really not much going on. Intraday, not much of a range as well, about 9 handles out there in S&P land, which again, compared to what we've seen of late, certainly not a huge a huge amount of volatility, a huge amount of action. Speaking of volatility, we still are on the lower end of the recent range out there for all things VIX cash, hovering as we speak, as we are recording right around the about 1240 level or so. So well south of the old, the much talked about 13 handle. In fact, this is, of course, a point we've debated back and forth on the Volatility View show. Tune in tomorrow to that program to see how our predictions come to pass. But, of course, not to get into the around the block too much, but we do have a pretty sizable number on the docket for tomorrow. And yet the market taking a bit of an exhale from a volatility perspective. So, again, it's kind of hard to escape that seasonality of volatility when this time of year, regardless of whatever else is on the docket, whether it's non-farms, whether it's Brexit, whether it's, you call it what you will, brief flirtations with highs out there from a vol perspective, and then we come crashing right back down. We'll see if we get a little bit of movement from a vol perspective tomorrow, or if perhaps it's just another ho-hum number, and it's kind of back to the doldrums of the summer. What's not in the doldrums, though, Uncle Mike, is one of the products you like to watch a lot, which is the Texas tea, the crude oil out there. It's been moving and shaking quite a bit, mostly to the downside of late, kind of bouncing off those recent lows. It's kind of been vacillating lately around that ever important, at least out there in WTI land, that ever important 40 handle out there. Broke through it ever so briefly, then kind of rebounded back. We've seen a lot of interesting developments as a result. We saw going into that, of course, in the last couple of weeks, people very heavy on the puts out there in WTI and other big futures options, and a lot of that being borne out as you saw crude really surrender a lot of its recent gains. Interesting stuff. And Uncle Mike, you like to play usually through XLE and a few other products. What's been going on? What's catching your eye out there in the crude oil land, as well as, of course, with the rest of the market, sir?
I'd mentioned on our show earlier this week how we are around a 50%, close to a 50% retracement level. I think that I like oil at this level, to tell you the truth, Mark. We've had a nice couple days in the Texas tea itself. We've been just looking at between the open yesterday and then the close today. Over the course of the last 2 days, we opened yesterday at 39.70. And we're at 41.77 as of the close today. So that's a nice little move over the course of the last couple days. So I like oil just because of the levels that it's at. If you're willing to hold on to oil, XLE, or your oil stock for 4 to 5 years. If you're looking to just get into it over the course of the next week or so, who knows at this point. But if you're looking to have a 4 to 5 year sentiment on oil like I do, I think now is a great time to get long anything that you could, with the exception of the shorting the out of the money 30 puts or whatever you told me I should do on the XLE or whatever.
To be fair, I think it was 35.
Oh, the 35s. Got it. Some other things that I'm seeing today, I think oil is the big mover today. But the other thing that it's not so much today, although it did have an update today, over the course of the last 2.5, 3 weeks or so, Alibaba, it's kind of snuck up there. It's had a nice little 5% move in the last few weeks. And so maybe a lot of it has to do with Yahoo and Verizon doing their thing, even though they weren't part of that deal. But I think just it's one of those things to where that did kind of bring some news to them. And that's another thing just to kind of keep an eye on, because if Alibaba can break through for another few dollars, I could see some more upside there. So once again, it was up over 1% on the day today when the market itself, I think the S&P was up 0.1% or something along those lines. Of course, Tesla was up 2%, but who cares about Tesla? That's not a big deal. We always talk about them on the show. But aside from that, not seeing a lot of movement in things. I think a lot of what the market is doing at this point is just like what you had said earlier, is just kind of getting geared up for the big non-farm number tomorrow, which may or may not even be big.
Yeah, it's always a bit of a crapshoot with non-farms. You know, we often joked on this program and indeed on Volatility Views that coming into this year and last year, non-farms was kind of a bit of a non-event, a pun intended. You know, it used to be the big market driver back many, many years ago. It was the number everyone paid attention to, waited for with bated breath. Now, not so much, of course, than the recent non-farms surprising everybody. With some surprising numbers. And as a result, all of a sudden, it cast a lot of people into doubt what they thought about non-farms. And now non-farms, I would think this time around, going to be a little bit more eyes on it, even though it does seem like the Fed's hands is still kind of tied. Hearing more talking about easing coming out of Britain today as a result of post-Brexit. It does seem like as every day progresses, the Fed is losing arrows in its quiver in terms of potential raises. It would be kind of bizarre at this point or in the near future if they decide to turn around and raise when the rest of the world is easing pretty aggressively. And of course, Uncle Mike, we talked earlier on the show about volatility. Things are getting fairly cheap out there from a vol perspective when the articles are starting to hit out there. And sure enough, they are. That vol is low. Why is it so low? We're seeing a lot of those now. Usually it seems to be about these levels. The 12, 13 handle in VIX is when the articles tend to pop up. We've actually been there for a couple of weeks now, and they haven't really started cropping up in perhaps the mass that you might expect. A few of the ones coming out recently also pointing out things like currency vol also down a little bit. Post-Brexit, we're seeing the JP Morgan index that's widely tracked out there for 3-month currency vol hitting its lowest since 2015, the end of that year, which is probably surprising to a lot of people given the fact that we've seen a lot of rocking and rolling in Euro USD and more importantly Pound USD over the past few weeks out here. And since it is early in the month, Mike, we're still trying to beam in one of the Pip Boys, who again, like I said, are having some issues today. But looking at, of course, the beginning of the month, that means it's time to cast our glance actually backwards at the month that was. OCC coming out with their numbers at the top of the month here for good old July. And despite the fact that we had some activity in terms of big macro events in July, not so much from the overall volume perspective. OCC net their total volume for what they clear. Remember, that's the Options Clearing Corp. Their volume was down 18% in July. That's, of course, from the July of 2015, so year over year. Overall exchange listed options volume, which is, of course, what we're interested in, hitting about 309 million contracts. That's down actually 19% from July of last year. And year to date, even though that month kind of weak, still looking fairly robust on the year. Year to date, volume up about 2% from this point last year, right about 16.3 million contracts. Breaking it down even further, you want equity options, about 275 million of those in July. That's again down 19%. ETF options volume, about 122 million contracts. That's only an 11% decrease, so shows you where some of the activity still is out there in SPY and a few others. And overall index options volume, I guess that would be in the index options. That's one of those weird ones that kind of crosses both lines, down about 13% in July. So interesting stuff out there. I don't know, Uncle Mike, maybe a little bit surprising given the fact that it wasn't like July was the most quiet of periods out there in the marketplace. Does that surprise you that we saw such a market decrease even from July of 2015?
Yeah, it does surprise me, actually. The fact that index options are down, now, what do you say, 13%, I believe?
Yes, sir.
Yeah, just especially with what was happening with, we had a really big move, and it was, I guess maybe it was just so fast, everyone was maybe so stunned with fear that people didn't want to trade it, apparently, because that's one that really surprised me, that was not just lighting up the tape with volume after something like what was going on with the Brexit. So yeah, to answer your question, I'm very surprised with the index number especially.
Yeah, you think of anywhere there'd be some flight to that, and we certainly saw some pockets of action there. But it is hard talking about fighting against the seasonality. July, not exactly a strong seasonal month for options activity. Usually people are on vacation or they're heading out to vacation in August, and so they're not really putting on big positions, doing a lot of sling and size in July, and that certainly perhaps reflected in the numbers we're seeing out there. Speaking of numbers, let's pull our attention towards what's popping off today, Uncle Mike. We still are, even though a lot of the big names are behind us, we still are here in the teeth of earnings season. We had some names coming out before the bell. We had MGM Resorts, Icon Enterprise, H.H. Gregg, that interesting electronics property out there. Quasi Best Buy / Sears kind of rolled into one with the appliances and everything. But after the bell, we have some interesting names, including one of our former favorites, kind of fallen off our radar a bit over here over the last couple of years, Uncle Mike. This was Activision. I know I used to talk about this one a lot. I believe the Rock Lobster did as well. It used to be when it was in that 14 to 19 range. It was one of the more reliable premium sales out there. You could write puts, you could do bullish risk reversals, and a lot of other trades that involve some sort of premium harvesting element, and they would always perform pretty well quarter after quarter. Of course, the name has moved quite a bit since then. Activision closing right around $40.85 or so today. They were pricing in about a $2.80 move, which works out to about nearly 7% on that name, and coming out here in the after hours. And it looks like they're moving a little bit. First blush, it was a slight move, only about 3% or so, about $1.30. And now, as updated prices, it's even less. It's only about $0.50 or about a little over 1%. So, seems like at least right now, premium sellers once again the winners out there in terms of options activity. Speaking of options activity, yesterday we didn't have a show on yesterday, obviously, but. The rumor du jour yesterday from an options perspective certainly was all the talk, all the frenzy over there on Twitter about that will they, won't they dance, will they finally be acquired. We saw a lot of that movement as a result being reflected in the options market, of course, with today the stock gapping up about another 3% on the strength of those rumors. And of course, we were seeing a lot of prints, a lot of paper out there reflecting that upside focus. Our friends over there at Trade Alert talking about how call options were very much leading the charge, about 3x what they normally do on a given Wednesday afternoon. This is, of course, yesterday's paper with call options, again, leading the charge. The 17 halves, and 18s all leading the charge. All of those pretty much in the money right now. So if you loaded up on those, a ballyhoo for you. And even today, right now, about 2.3 to 1 calls over puts out there in the Twitterverse right now. So you talked Tesla before, Uncle Mike. I come back at you with the other T name that is often super hyped. And we don't usually talk about Twitter options a lot here on this show because there hasn't been a lot to talk about, but they do decent paper. They've been averaging about 85,000 contracts a day. I don't know, Uncle Mike, is this one of your core holdings in the strategic night? I could see you really putting a lot of the retirees and grandmothers into Twitter. It seems safe.
Well, only if we leverage it to high. I mean, with portfolio margin, if we can get 7-to-1 leverage on Twitter, that's what we really try and do.
That's, of course, implied. And you're writing 10x puts on the downside. That's all implied. I thought that was implied when I said that. Oh, got it. Of course. Then combine that
Indeed.
With all that. So, yeah. No, not exactly. You can't say that a levered Twitter holding is a core holding. Although it would be fun, maybe.
It would be fun. Speaking of fun, the fun has just come to a screeching halt here on the program because I believe that very, very tinny voice is none other than the Greasy Meatball himself. Greasy Meatball, someone's got to update your Skype over there in the Grand Option Pit World HQ because it was not playing nice with us earlier.
No. So, didn't realize I was offline, and that's what happened here.
So what's been catching your eye in today's activity, sir? Better late than never.
Oh, it was sleepy. A nice sleepy day. Little bit of a pop out of Facebook, followed by a little bit of a pop out of Apple today. So that would be the main thing I saw. A little bit of a huge Tesla fail on its straddle, like a crazy Tesla fail in terms of its straddle. And that's about it.
What was lighting it up in the pitch chat today? Were you guys all frenzied about the Twitter palooza yesterday? Were you guys all about that? Were they all about Tesla? Which overhyped T name were they fretting about in the pitch chat today or yesterday?
We were really looking at Facebook. I mean, it was sitting there down, and then we all said, this thing looks like it's about to pop. And so a group of them bought calls, and of course then it rallied from down 20 cents to up over $2. So nice day in Facebook.
Yes, it is, and it's also a nice day to explore some unusual activities. So without further ado, let's keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for us to don our intrepid adventurer caps and go exploring into the dark wilderness known as the options market. Going to find some of the weirder, the wilder, the shadier, sometimes it's more bizarre head-scratching paper that is catching our eye today. Going to kick things off, not with a name. I don't think we talked about this one quite some time here on the old program. This is Comcast Corp, ticker symbol, a bunch of different funky tickers out there for Comcast. We're in particular referring to the mouthful CMCSA, closing today $67.18, up about 0.5% or so on the day. This is the name that does about 20,000 contracts a day, so not the most market moving of names, but also pretty decent volume for an odd block candidate, some of which do 80 contracts a day sometimes here in this segment. So you never know what you're going to get in the odd block. This one doing some decent paper, and I said today doing about 33,000 and some change. So pretty aggressive paper here, about 2.2 to 1. Calls over ye old puts when lighting it up today. I should give you some inclination, some inkling of what it is that caught our eye out here today. In particular, it was not the weeklies, but the straight-up AUGs that caught our eye. The AUG calls in particular. The AUG 66s with paper just coming in and just straight up gobbling those, buying them on sweeps across a variety of exchanges. Starting off with a big chunk, looks like about 9,000 of those AUG 6s going up. And as the day progressed, a total of nearly 2x, about 15,000 going up. They gobbled them up at a variety of prices from $1.40 all the way up to a high of $1.64, and of course the underlying rallying along with it. So they went out actually a $1.64 bid. So maybe there's some other more buyers lurking out there. Again, all of that on open interest of only 42 contracts. So this is clearly new opening paper. Looking back at the year that was out there in Comcast, and this is someone who's clearly expecting the party to continue and putting his money where his mouth is. This thing has vacillated quite a bit. The AUG 24th outlier notwithstanding, this thing has dropped down as low as the low 50 handles back in earlier this year, again, when all the market was in the height of its fury and frenzy, hitting about 52, and then has been on the slow upward trajectory. Actually, not that slow, 52 to 67, and not bad over the course of about 5 or 6 months. And of course, making it up here, hitting a high recently of right about nearly about 68. So we'll see if it can hit back at those levels. Either way, our friend here thinking the party continues. Mr. Greasy Meatball, let's start here. What's your take on all this call love here in Comcast?
Yeah, it was a nice little run there, wasn't it? It was a really nice little run.
I would say so. About 20, what was it, about 15,000. So what do you think? You think they're just think they're aggressively naked short? Think they're getting long? What's your take here, sir?
I think they just wanted deltas. I straight up think they wanted deltas, and that's the problem.
Why is that a problem?
Well, I mean, it's not really a problem, but I think they straight up wanted deltas, and that was the issue, is that they were trying to get long a lot and quickly, and so that's why they bought in the money calls.
Yeah, definitely now in the money, somewhat deeply in the money now, and we'll see if these continue to work out for them. Maybe we'll flag these in the to be watched portion of the show to see if perhaps these things come into play even more so than they already have. Remember, they paid about $1.60 for some of these listeners. They need a nice little pop. They're getting close to it, but they haven't gotten all that they need quite yet. We'll keep an eye on these. These are AUGs, so they'll expire fairly soon. We'll have more of that tale unfolding in the coming weeks. Meanwhile, let's move on to another of these names. This name's been flirting, coming on and off the program over the last few months. There's been a variety of Nobles on the program. This time up, it's Noble Corp PLC. Ticker symbol NE. This one closing today, $7.15. This is our resident cheapie on the show today, off about nearly 0.5%, but still, it's such a cheap name, it doesn't mean it really moved much at all. Averaging about 6,300 contracts a day, doing about 17,000 today here on the old day. About 21, 22 to 1 calls over puts. Again, that should tell you where our eye was drawn. This time, we're not talking AUG, we're not talking OC. We're talking all the way out past January, all the way to March. Yes, March of 2017, where we saw some size call selling to the tune of the March 2017 11 calls. Paper blasting out quite a few of those, starting off with about 10,400 for 39 cents, doing it through the old ISC platform there. Total just a tick under 11,000 on the day. If this is a call holder, an underlying holder looking to harvest a little bit of yield, this would get them right about 5% if all else holds steady over the course of the next 7 months or so. Not terrible, not great, kind of somewhere in the middle there. Of course, we're in a low yield environment right now, so you may have a different viewpoint on those. Of course, there is some open interest to be said here, about 17,000 open on this strike, so it is possible they are giving up the ghost here as well, seeing these 11s as being perhaps a wee bit optimistic and deciding to unwind those. In fact, that March 11 strike being one of the only strikes except for the Jan 15s that has any real size open interest that far out. The rest of them are all pretty meager. In fact, if you go all the way back to September, the SEP 10s have about 27,000 open. That's really about it there as well. Not exactly, like we said, the most high volume of names. Looking back at the year that was for good old Noble, this is another one that's kind of been vacillating around quite a bit at the current low end of that range, but it has been substantially higher not that long ago. Back at the end of the year, it was pushing $14. Then, of course, in all the tumult in the early part of the year, it gave up a lot of that, and then pretty much retraced all of those losses and then gave them up yet again. So this thing has been kind of vacillating all over the place. Not surprising given the tumult we've seen in their side of the space. So, Mr. Greasy Meatball, we turn once again to the Option Pit World HQ. Where do you fall on these? You thinking this is someone looking to grab that 5% through March? You think more this is someone giving up the ghost, given the size open interest on that strike?
Well, I think it's clearly somebody looking to make a buck or two off of, trying to bring some value into the trade. So somebody that's long, trying to harness some value. That's really what they want.
So you don't feel it's a closer, even though that's the one juicy active strike out there?
I mean, it could be, but it was kind of an odd. I mean, the March 11s. I mean, I don't know when. I mean, let me look here. Maybe it was a close. Let's see.
Well, it is called the odd block for a reason, sir. Things are usually odd.
Yeah, I mean there is some decent activity there, but no, I think relative to, I mean, there's good open interest there, but the last trade, the 17,000 only went up on the 3rd. I don't think it's a close. I think it's additive.
Yeah, I think that could very well.
So I'm almost certain it's additive.
Oh, Henry, our friend Henry from Trade Alert, chiming in via the chat. He's agreeing. He says he thinks it's additive as well. Says a lot of size traded there yesterday as well. That could be where some of that open interest clearly popped up. So there we go. A couple of votes here for additive as we keep on. That's why we like the live people. They can chime in and give us their 2 cents as well as we close out of the old odd block today. Keep on rolling. It's Thursday. It means it's time for you guys to take the reins, and it's time for us to check in on the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the name implies, this is the portion of the show where you guys get to take the reins with your questions, your comments, your insights, your pearls of wisdom for us and for your fellow Option Block listeners. Hit us up. No shortage of ways to do that. Twitter, the easier ways. A lot of you guys like to use Twitter. We're at Options on Twitter. You can DM us. You can send us whatever you like out there, and we'll, if it's good, put it on the show. Of course, Facebook. Not as many of you guys like to write in by Facebook. I'm not sure why it is. Twitter seems to dominate it, as well as stock twits or via the website. So your website feedback form, a lot of you guys like to use that as well. And of course, it's all baked into the mobile app as well, including our email, just questions at theoptionsinsider.com. That's a hard one to remember, I know. Let's kick things off. Actually, let's follow up on what we were talking about and kind of debating on the show on Monday. This was our question of the week, and we were asking you guys out there, what is the most important thing to you guys when you're out there choosing a broker? Who's going to handle your options business? We know it's kind of a very tumultuous choice. A lot of you guys have a lot of different things that factor in. We were limited to 4, the choices that we gave you. You wanted to put a lot more, but it was a Twitter poll after all, also. You can't really put 27 different things down there. So we limited it to commissions, platform features, support and service, and educational offerings. We've had a few more days for this thing to bake now here, so I'll put it to you first, Uncle Mike. We talked about this on Monday. You had some thoughts. Have your views evolved? And what do you think is winning as of, there's one day left on this poll, so what do you think is winning as of the final day here?
Well, I think the winner on the poll is still going to be commissions, because it seems like all I've ever heard about, being in the brokerage world for so many years. So I'll say that's winning. But once again, I will still say, although I think that they're all important, I think platform's important, I think commissions are important. But to me, just the customer service, because at some point that platform is going to fail. I don't care how good it is. And as long as it's designed by humans, it will never be perfect. And I want to know that I have someone there on the other side of the line that has my back. So that's my pick.
Spoken like a man who's had some issues with service in the past, sir.
I have, as a matter of fact.
How did I know? How did I know that was bearing fruit, weighing upon your answer, sir? Mr. Greasy Meatball, I think you said, I forgot what you said on Monday. I think you might have said platform. Is that still your answer? And what do you think is winning the poll with one day left?
Probably still way ahead because people are short-sighted, and then platform's number 2.
You are correct. It is about still strong in the lead for commissions with about 57%. Platform number 2, about a third, 30% or so, weighing in. Support service, Uncle Mike, they're not feeling your love on support or service. They are resoundingly rejecting that, looking at money overall. Maybe not surprising given the current environment we find ourselves in. But I think this is the kind of environment, too, also where a broker could maybe distinguish itself with a little bit better service. And apparently people not wanting to hear that. And then about 10% coming in on the educational offering. Still about a day to go, so if you haven't weighed in yet, let your thoughts, I should say, our thoughts are pretty easy to find. Let your thoughts be known there. Hit us up at Options, and you can see it. We pinned it right to the top there, so you guys can let your voices be heard. All right, moving on to see how many we got time for here today. Let's go this one first. This one comes from Fred. He asked a lot of questions. Usually they're futures oriented. This time he's asking, I've listened to many of your broadcasts, and they were all pretty much way over my head. Which one should I focus on to listen to as a beginner? Good question there, Fred. I'm assuming you wrote into this one that you're listening to this one. I don't think this show is too deep in the weeds. If you're a complete options neophyte, maybe you're coming from the world of futures first or stock or mutual funds, then it might be a little bit much. We do talk about things like implied volatility, unusual activity, and open interest, and some terms maybe you're not familiar with. So we do have some programs for you, though, on the old network, if that is indeed the case. The easiest one is it's in the title. It's called Options Boot Camp. So I recommend you check that one out. That'll take you pretty much from 0 to 60, and that's aimed at not so much you, but the basic stock trader, but, futures trader, that applies to you as well. So if you are familiar with some sort of underlying, you want to take that next step, getting into options bootcamp is the way to go. We do that one a little more sporadically now. We want to get it back on the schedule on a more regular basis. Also probably do it live for you guys. I just had a meeting about that a little while ago today. Maybe we'll get that one live and streaming for you guys, because I know you guys love it. Even though we haven't been putting it out as actively recently, you guys still devour it en masse every month. So we know we want to make more of those for you guys. And also, of course, every week there's Options Playbook Radio. Our friends over there at Trade King and Brian, they do that based on the titular Options Playbook, which is another book that kind of breaks options down from A to Z. So if you are that proverbial what's a call, what's a put guy, that's a good show for you. Again, for both of those programs, maybe you don't tune in now because they're tuned to the most recent episode, because they've gone down the rabbit hole a bit. That's why we put all the archives out there for you as well. So go listen to episode 1 of both of those shows. You can find it at iTunes. Maybe not iTunes. They limit the back episodes. So maybe our website's probably the easiest way to go, or grab it via the mobile app or maybe Google Play. And you can find those shows there and listen to episode 1, and it'll kind of walk you through what you should do. And then episode 2, and you listen to it on your leisure while you're commuting, working out, whatever you're doing. And who knows, a couple weeks down the road, you listen to a bunch of shows and you feel a little bit more confident about what you're listening to. Then maybe you tune into an option block, or maybe down the road a little vol views, and you can get a little bit further down the rabbit hole. And we try not to make everything or anything really too impenetrable. That said, some topics are a little more advanced than others. So we work diligently to try to make that stuff penetrable for you. Hopefully that helps Fred and anyone else out there who's trying to make sense. We do have 15 programs now. I know it's quite a bit, so it may be over your head for some of you. So that hopefully that helps you see the forest for the trees. All right, next up we got a question. I like this handle, Grasshopper. He says, or he writes, I've heard option strategies may be vulnerable to, this is a colorful one, to dump like an elephant criticisms. Are the losses big, and are high win rate strategies a cause for suspicion? Well, obviously he's been lured in, or perhaps seen some of these, high probability, quote unquote, type strategies that are marketed out there quite a bit. Your naked puts and all the other typically premium harvesting type strategies. And they do, make a little bit over time. And then, as he so colorfully puts it, they can be exposed to that dump like an elephant, where it does go against you pretty aggressively. I don't know, maybe Uncle Mike will let you chime in on this one. What are your thoughts here from Mr. Grasshopper? He's scared to have his strategies, quote, dump like an elephant. What do you recommend for him, sir?
I think he's wise to be scared of his strategies dumping like an elephant. Just to give you an idea of it, right now, let's go back in time about 40 minutes or so, when the market was open. You could have sold the SPY 209 put for 1 penny. Now, SPY right now is at 216.40. So that means that there would have had to have been a 74-point drop in the S&P 500 tomorrow, approximately, for that one to lose. Odds are extremely high that you would win on that trade. And with that, you only have to hold that trade. Let it expire worthless, of course. I mean, we can't close it because we only sold it for a penny anyway. But let's go ahead with that trade. And so with that, I would say that the odds of that trade winning, just from being an armchair option, high probability trader for this question, would probably be 99.9% certain that trade would win. So by doing that, you can make $1 a day pretty easily. The reality of that is that at some point, you're going to lose doing that. And you're going to lose, and you're going to get your face ripped in really badly. Now, this is an over-exaggerated example of it. I know you guys referred to guys like that on the floor as tiny premiums or teeny premium sellers, and you guys always remark how they always wore a different jacket every year because they always got fired from the firm that they were with. But I think that you need to be very careful when doing high probability strategies, because when you lose, you need to know that the losses are going to make up for the fact that you had the odds in your favor so much. Now, when I'm doing something that's quote unquote high probability, I like to have some type of risk management involved. So let's say that I'm selling a credit spread for a $4.50 risk, and I'm getting 50 cents for it. I usually like to take on a more active role in risk management that as soon as I don't want to lose more than approximately 50 cents on that trade. So when the trade starts going against me, I don't have the arrogance to think that, well, I'm a premium seller, so I'm immune to risk management. So long as the market doesn't go down X amount, I'm safe. I don't have to worry about it. If that's your attitude, if anyone out there has that attitude and they're selling premium, shame on you. Who are you to think that you're immune to risk management? If that is you, then I would suggest just not to trade. Just get out. We do not want you in our business because you make everybody else look bad. No, just kidding. But the reality of it is that if you are doing a high probability strategy, make sure that you have some type of risk management approach to have an understanding of how much you're going to lose at the times that you do lose. I can make something sound really, really intriguing in terms of how much percentage that you're going to make and the high probability of what it's going to do. Let's say this is a 80% probability that you're going to make 20% over the course of a week. I could come up with a credit spread like that in 10 seconds. It would be that easy to come up with, in my opinion. However, 80% probability is not 100% probability. There's no guarantees in that. And when you get the 20%, the times that you will lose, and yes, you will lose, you'll lose a lot more than 20% most of the time. So have a plan for it. Manage your risk, and don't put on the rose-colored glasses because you're just going to lose money.
All right, and Mr. Greasy Meatball, I'm sure you have a lot of people coming to you guys with a similar question, maybe not quite as colorful. They don't ask you if they can prevent their strategies dumping like an elephant. I may have to borrow that sometime down the road. I like that. But what do you say to our friend here? What was his name? Oh yeah, Grasshopper. What do you say to our friend here, Grasshopper?
I think that the big thing people forget is that there's a big difference between probability of success and probability of being touched or threatened. And so those ones that look like they have really huge probabilities sometimes don't have nearly as good a probability of not getting into trouble. So unless your plan is to close your eyes and Karen the super trader it, you may have a lot more problems than you realize.
Got to get those digs in on every episode. I like it. All right, good question, Grasshopper. I like you, sir. All right, let's move on here. We've got, let's see here. Let's go to, I usually don't give people a couple of swings at the bat, but he sends in some good ones every now and then. Let's go back to Fred. He wants to know, would trading options change the way he looks at, he's a futures guy, obviously, the way he looks at or trades futures? Well, I would hope so. That's kind of what we're going for here on the old program, and indeed all of our educational stuff here on the network as well. You think about what you're looking at when you're a futures trader. It's literally a Delta 1 product, so you're looking at just the underlying. So your sole focus is Delta. Usually it's intraday, a lot of small ticks and minute types of scalps you're trying to make out there, whereas options, think about what we're talking about on this program all the time, things like gamma, but also theta, which is literally time decay, or volatility. Those things tend not to play out intraday as much. They can. So I'm not saying they won't, but they tend to take a little bit of time. It's built into the name, time decay, for those kind of things to play out. So options traders are generally focused a little bit longer term. Doesn't mean they go for months and months and years. It could be as short as a few days, but just not intraday typically. That said, there has been some interesting research done about using options intraday. Maybe we'll get to that on a different show another day. But I think that would probably be the first change that probably would encompass you, is that you'd probably have a little bit longer term view, and also you'll start to be cognizant of a lot more of these risks and things that are going on in the marketplace than you are right now, where you're so exclusively, myopically perhaps, focused on Delta to the exclusion of all the other risks out there. And now we start talking about things like volatility on the show all the time, or the other risk, gamma, which is obviously an option-centric risk, but that will play in as well. So all these other things that start to become a little bit more cognizant of, I think that can't help but give you a more holistic view on the marketplace and indeed on your trading. Maybe you'll change your futures trading as a result. I think probably what will happen is you'll start to learn about these things we're talking talking about. And I think you'll go back and incorporate these things into your futures trading. Maybe you'll start using, something basic like a covered call against your futures position as a way to generate income and yield, like we were talking about before. Maybe you start using cash secured puts or put spreads as a way to, instead of limit orders, to start to get paid to get into those positions. Maybe you'll get into one of the RCM favorite trades, the triple income / the wheel trade, and covered calls and short puts, and get paid to get in, get paid to get out. And then you start getting into more advanced spreads and the spreads with wings. You start using options as surrogates for the delta, maybe a bullish risk reversal, things like that. And you start to use them in a lot more in conjunction. I think it can only serve, I think, to broaden your horizons as a trader and give you more tools in your toolbox. Which at the end of the day, I think that's a good thing. I don't know. Maybe you want to have that myopic focus on futures, but I think in general, I can't imagine that being a bad thing. Uncle Mike, take the counterpoint. Say I'm crazy. Say that learning about options as a futures guy would be the worst thing ever. I'm sure that's what you believe, right?
In terms of the point, I think you make a good point, but in terms of you being crazy, well, we all know you're crazy.
That's a given.
There you go. No, I think it would definitely make sense to have a good understanding of options, even if you are a futures guy. There are times to where, just as a futures trader, you may want to get in, and just at worst, you just may want to get into a trade. Let's say that you're going overnight as a futures trader and you're like, you know what, I'm really bullish on XYZ futures, whether it's corn, coffee, cocoa, sugar, wheat, whatever, but I'm just concerned about this event that's happening tomorrow. And if I'm in this futures contract, then I could get called out on margin. I'm just concerned with it. Well, if that's the case, if you have a good knowledge of options, you could still get a similar upside by setting up an option spread of some sort, because maybe you need to mitigate volatility. So that's why it's important to have an understanding of spreads. And then that way, if for some reason there is a huge move against you, then you have limited risk. So I think that having a good knowledge of options and spreads, and not just understanding what a call is and what a put is, but just really having an in-depth understanding of how a spread can work, would really be of benefit for just that situation alone.
Greasy Meatball, have you guys encountered this over there in the land of the pit? Has anyone approached you? I'm sure most of your clients come to you from the realm of equity trading, and they want to start adding options to it. Has anyone come at it from futures? And what has been the result? I'd have to imagine they were vastly improved as a result of learning about options, and probably became maybe a better futures trader as a result.
Well, I just yesterday I was talking to a futures trader that wants to replace his futures trading with options on futures because he wants the leverage on the leverage, and it makes total sense to me. So yeah, I see it all the time.
What are you munching? Is it good? Can I have some?
I'm having a tortilla chip, and it's delicious.
You could at least bring some snacks into the studio for me here while you're munching in my ear.
Next time I'm in, I'll bring snacks.
And making me hungry here. I'm going to turn you down so I don't hear your munching and I get hungry, and hopefully our listeners don't get hungry as well. Let's see. We're kind of running up against it. We got time for one more. Let's do a silly one. Let's go. This one comes from Anthony. He's got an off-topic question here. Anthony Cioffi. If I mispronounced that, I apologize. He says, I got a somewhat off-topic question for the show. I know Mark's a fight fan. What does he think of the recent sale of the UFC for $4.2 billion? Good deal, or did they dramatically overpay? What are the odds that the UFC will eventually go public as a result of this deal? It would be fun to trade options on that name. They would probably be very volatile heading into big fight cards. Well, I agree entirely. Good deal. I don't know. It's kind of it was a big trade. If you're not familiar with this, the big MMA organization got acquired by actually a consortium of investors, including Michael Dell and groups out of China and a bunch of other things, for over $4 billion. They're one of the biggest sports deals ever. Of course, if you look at it from the perspective of a league, they bought an entire sport effectively, then maybe it's cheap. But from any sort of multiple, if the Rock Lobster was here in his diehard fundamentalism, it was a 22 times multiple. That's pretty rich from a fundamental perspective. So it may be hard for them to make that money back in the near term. But I'm with you on, I would love to trade, to have it go public and trade some options on that. And you're right, it would be hugely volatile. It'd be like, the analogy people often use is that, they use it, the movie studios, and all the time a big movie comes out, it moves the stock. But it never ends up moving that much because those are big conglomerates, and one movie is not really going to make much of an impact overall in the net picture. Whereas this is a smaller company. WME does have other holdings, obviously, but this would be a big core of it. So a big, huge card may have a lot more volatility injecting ability than, let's say a movie. So I think that'd be kind of fun to have those products there. So I agree with you. Yes, I like the notion. I love the trade options on it. Good deal. I don't know. I'm gonna go to maybe 22x multiple. I don't know if that's a trade I would be doing anytime soon. Good questions, even some of the silly ones. But now we got to keep on rolling with the show. Right now into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the portion of the program where we tell you what we're watching, what we're keeping an eye on, perhaps trading throughout the rest of this week into the old weekend. Let's check back in on the name we were watching earlier. That is Activision. They seem to have settled out around up about $0.50, 60 cents or so. So right around 1.5%, right around the 41.5 level. So dramatically off what they were pricing in, which was close to about 7% in the after hours. So perhaps another name underperforming their straddle here. Of course, we'll see tomorrow how all that plays out on the open. If you're looking for other earnings to play tomorrow, not a heck of a lot. Pretty much Virgin America is the only game in town, so not exactly an earnings palooza. If you want something to trade, though, tomorrow, don't worry, we got you covered because, as we alluded to earlier in the week, tomorrow is non-farm day, and it's kind of a bit of a crapshoot these days as to whether or not non-farm is going to be the big tumultuous market-moving event that it has been in years past, or kind of a bit of a whimper. It's kind of done both in recent numbers, so we'll see how this plays out. That said, the last one was kind of a bit of a surprise, so like I said at the top of the show, I kind of think it's going to have a lot more eyes glued to it. That said, we're not seeing the usual little spark of premium coming in ahead of a number like this. People may be looking to hedge a little bit or anything along those lines. We haven't seen a lot of that, so maybe perhaps that's one indication that the market not really pricing in a walloping big move. I don't know, Mr. Greasy Meatball, we'll start with you. What are you watching for the rest of this week, and what do you think this non-farm is going to be? Pretty much a whimper? Are you surprised at the fact that given what we saw last time, people aren't maybe looking to position around it a little bit more?
Yeah. So I was just saying, it looks like they're pricing in a huge dud. And, it's going to be boring. And, maybe so we're set up for an outlier. We're set up for, hey, things could be nuts if the number is really a big surprise. But, my guess is the market's smart enough to have that figured out. So it looks like a dud tomorrow.
Yeah, they're certainly not pricing in some crazy market-moving event. What's your take, Uncle Mike, and what else maybe in the hinterlands out there are you keeping an eye on for the rest of the week into the old weekend?
It looks to me like, I don't know if it's going to be a dud. I would refer to it more as a resounding meh. That's the term we use on this program, according to our host.
That's copyrighted, sir.
Oh, sorry. All right, well, I can use it on this show anyway. Yeah, watching to see if oil can continue. It had 2 big days the last couple days, and just want to see if that continues. And that's really about it at this point.
All right, that music means we've come to the end of yet another foray into the world of all things options. Started off a little bit of some markets talk, got into some Twitter, some volume, dove into some unusual activity and some weird and bizarre names as usual. Got a whole a grip, if you will, of your questions, including some silly ones there on the program. Wrapping it up with a look at non-farms. But before we go, let's check back in one last time with my cohorts, my partners in crime. Let's start with you, Uncle Mike. What's cooking in the land of all things RCM Wealth Advisors?
If you are a self-directed trader, which most of our listeners are, you trade your own accounts. If you would like to trade for 35 cents a contract, you can come and talk to us and see if you can trade under the RCM umbrella through TD Ameritrade Institutional. There's a lot more with which you can do with that, but if that's something with which you're interested in and you would like to have advice if needed, feel free to contact me at 312-212-3531 or send me an email at mtusa@rcmfs.com and we can talk.
And if you're an option club out there, you're part of an option club, you want Uncle Mike to come talk to you, hit him up. He'll do it. I won't do it, but he'll come do it. He'll come to your town to talk to you. So reach out to him, and he'll do it. He'll be happy to foot all the bill himself. So by all means, have him fly out to your club of choice. I hear there's 5 guys in Des Moines, Uncle Mike, that are raging to see you.
Oh, Des Moines. I love it.
Des Moines. Heck yeah. No, of course, if you are one of those aforementioned, reach out to him. He might just be so inclined to come see you. And of course, good old, or not Uncle Mike, but the Greasy Meatball, once again forgetting to pay his Skype bill. So I shall do so for him by giving the aforementioned plug. If you're maybe coming off the heels of the big Professional Trader Summit they had there a couple of weeks ago, and you want to check out some of the other stuff they have going on over there, easiest place to do that, optionpit.com. Click on there. They also have the webinars coming up on the weekends. Click on the events and the webinars stuff. It'll all be there for your listening and learning pleasure. And on behalf of Uncle Mike and the Greasy Meatball and the Rock Lobster, couldn't even be here, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, for those of you who tuned in live, we love you guys as well. And of course, all of you after the fact, we also like you guys, don't worry. And we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.